Okay, folks, as promised, we're going to go over 3 different types of investments. That will be stocks, bonds, and mutual funds. So what are stocks? Basically, stocks are small ownerships in a company. Stocks are also called equity. So any investors that own shares of stock, they own small pieces of the company. Why do companies issue stock? Basically, companies issue stock so that they can raise money for things like paying off debt, like new product launches, if they want to expand into like new markets or new regions, or if they want to do like some capital expenditure improvements, like building new facilities. That's why companies issue stock, to raise money. So why do investors buy stocks? Investors buy stocks for a variety of reasons. One of the main reasons they buy stocks is because they hope that the value of the stock goes up over time, and then they can sell the stock for a profit. A lot of people buy stocks because they pay a dividend, which is like a payment to the owners of the company, because it's like a bonus. So since you're an owner of the company, you get paid a bonus if the company is doing well. You might as well say that's a dividend. And then a lot of other people buy lots of shares of stocks of a company because they can have some kind of voting influence of the company's major decisions. So they get voting rights. They buy hoping that the price of the stock goes up so they can make a profit. And then they also buy if the stock is paying dividends or payments to the owners based off of how the business is doing. So I know what you're thinking. What are some of the benefits and risks of owning stocks? Like I said before, some of the benefits of owning stocks is long term. Hopefully the price goes up. You can sell the stock for a profit. While you're holding the stock, hopefully it's paying you dividends as being part owner. So you get payments for being part owner. Hopefully the stock goes up in value, so you'll gain once you sell it. And then you get voting rights for the company's major decisions. That's some of the benefits of owning stocks. Some of the risk of owning stocks. Stocks are very, very volatile. The price can change drastically any particular day. They're very volatile, very unstable at times. They're very, very risky. If the company's having financial issues, if the company goes bankrupt, or if the company goes out of business, it's going to be very hard to get your money back out of the stocks. It's going to be very, very hard. So here at Brainy Smurf, our main business is to look for foreign stocks. But for this channel, we stick with investment types that are a lot more stable for 401k. We don't do single stocks on this channel for 401k. We do the mutual funds, which we'll go over those later. This is the end of the first video, the first of 3 videos. Stay tuned for what are bonds.